Good morning, team. Happy Saturday morning. Um, what a week, huh? Saturday is going to be a good day for me today. I am going to the Sixers Heat game tonight, so that should be fun. I'm looking forward to it. So to go over the week, I'm going to go over the week, the stocks the trades that I have on, and some of the ones that I gave you guys throughout the week, Wednesday, Thursday, and Friday that worked out really, really well. I'm not sure anybody took them, but that's why I give them to you so you can take them and make some money on them. I'll go over those with you guys. The market, no surprise. Let me get my no surprise what I told you on Thursday that we were kind of toppy. I positioned myself for a little down day, and we got got lucky there, and we got even more lucky with more continuation. It broke this trend line. There's this little wedge here, so this is a typical, downturn. Whenever you have a turn, whenever you have a market going this way, and then you have a nice little turn, it normally corrects itself to the high side. If you're going down and then you have an upturn, it corrects itself to the downside. You have a little upturn, it corrects itself to the downside. So that's, again, I don't know anything. I'm not claiming to know anything. I'm just trading probabilities and what I'm seeing. And more often than not, when you have this little consolidation here and it doesn't break a trend line, and if you notice, over here, it just kept going up against it, and it was just due to come down. That's all it was. Very simple. Nothing, nothing too, intellectual about that. It's just, looking at it. The same. Let me clean this up. The same thing here when we have this little, death cross happening for this. Look at this 50. Look at this 50-day moving average from like around here somewhere when it kind of like broke it. It was going up, and then from here it started going down. And what has happened since this point right here? We have never had this level test again. The second it started going down, this level has never been hit again. So if you own here, you have lost money because it has never gone back up again. So this is what I'm saying about moving averages. Once it breaks the 50, you want to get out. Once it comes back above the 50, you want to get in. It's very, very simple. Over here in a strong market, you never broke it. Over here in a very strong market, it never even broke the 21. Here, when it broke it real quick and it came back inside of it, up above it again, what do we have? So we're looking for moments like these. You make a lot of money here, a lot of money. Here you stay away and you don't give it back, and here you come back in and you make a lot more again, and then here, somewhere around here, even here, let's say, okay, you give it up like, let's say 5%. You made like at least 40-50% here. You give up 5-7% here, and then you get out here again. You avoid all this. We're making money here because we're timing the market as best as we can, and we're looking for opportunities. And I'm never gonna stop working. I'm just gonna put the work in and do my scans and see what's working. And the stocks that I've been giving you, I would say 90% of them have been profitable, and the ones that haven't, my God, we lost like 1%, 2%. So, I mean, we're doing really, really well. If we stick to our systems and our rules and our parameters, and we focus on what's working, top stocks and top industries that are setting up, and the ones that they break out, we take advantage of them. And then the selling the premium is because, well, we've been going down. The VIX is extremely high, and it's there to take. And the second we have a little bit of a rally, even intraday, and we have a 25-35% gain on those push shorts, take them out and then you make some profit. Bring the register. This game is just this is the business to slowly grow your account, and not have one of these jobs, just a little bit, but then stop, and then keep it going, keep the account going. and that's over time, you will be wealthy. Um, okay, let me clean this up here. So again, what am I seeing for next week? I don't know, but there's a high probability that we do this, then this, or even if we do this, I don't see us clearing this. We might chop around a little bit here, and then eventually have a third leg lower. This is a nice support level right here. If we break this, we go down much lower. But look at the relative strength line. It's been going down. From here again. When the 50 broke, it's been going down. Even from here, it gave you a little bit of a heads up that it was, just you look for little clues in the market to kind of guide you. But this is not looking good. This is not looking good. The Fed has not started yet. They've said they were going to raise interest rates, and it's pretty much going to happen, in March, at least a quarter point. If they raise a half a point, we're definitely going to do this. If they keep it at 25, we might rally because that quarter percent increase, it's already priced in all this right here. That's already expected. That's already a done deal. So they haven't even started doing their cycle of raising rates. They're going to raise about a point and a half to a point and a quarter throughout the next year. So that's not conducive to a bull market. So I don't see this happening anytime soon. I see us chopping around maybe a little bit. But again, we'll play it. We'll trade what we see in front of us, and we'll constantly have a curated, what's working right now list, and we'll take breakouts, we'll take our profits, and we continue to grow our account. Okay, so I wanted to go over a few that I'm pretty sure nobody you guys took, including myself, because I took other ones. But again, I want to encourage you that if I give you setups, take them on your own. Take them. Become good traders. Just do it on your own. And if you have questions, ask me. But all these that I gave you, they all worked. You could have taken them. You could have made a lot of money on them. Well, I took this one. I don't know if anybody took it with me, but I took it here in this breakout right here, and I took my profits on Friday, either Thursday or Friday. Beginning, I made good money on that. It was a 37 and a half entry all the way to 48. That's 5 points. That's $500 in 3 days. We pretty much a low risk scenario. So that was a good trade. APA made good money on this one. Here's my alert. Here's my trend line. I took it right here. This puppy went from let's say 35ish to 39. I think I got out at 38 something. Make good money. Let me see, APA. A nice winner that I know some of you guys took. BTU. Look at BTU. It was up another 14% on Friday. We got out on Thursday. That's perfectly fine. I don't feel bad at all. You never want to be too greedy that you feel bad because you didn't make more money. You want to be happy that you made what you made, be grateful, and move on to the next setup. So that was a good trade. We took it right here somewhere when it came out. I think it was 18 something, or it was less than 20, and we took it for a nice 20% move overall to in the 22, 23 range, somewhere around there. So that was a great trade. Good job on you guys. Hershey guys, Hershey. I've been telling you about Hershey for the last 3 days. Look at this, 5 points on Friday. The entry I gave you on Hershey was a 206.15 right here, and this trend line right here at 206.15 right there. 206.15, you would have made at least 5 points on this already. $500 in 3 days if you had 100 shares. At least double that because we took it earlier than that. So you would have at least had 5-6% gain in 2 days. You want to make 5% a month. And you're gonna double your account in a couple of years. You're making 5% in a week. That's pretty damn good. So take the trades, take them. Put some risk on the table, and it's low risk because if you took it at 206, 206.15 when I gave you, at 204, 205, you would have gotten out. That's perfectly fine. You lose less than 2% because 2% on this was 5 points. You would have taken 2% loss. A $2 point loss, you would have had a percent and a half. That's great risk reward. My goodness. ARCH. ARCH, man, look at this. Another $4 on Friday, and it's, well, this doesn't mean anything. It's after hours, but we'll see what happens on Monday. But look at this trade. Look at this little base right here. It broke that. We took it right here. Boom. That's nice money. That's why these breakouts work. And if they don't work, I mean, this one worked 100%. This one never violated it. So you never were at risk here. Never at any one point were you at risk on this trade. And again, let's say you were taking this base back here. You have no idea that this ever happened, and you're looking at this, you're looking at this, you're looking at this, and then boom, you see this little base, and you take it at 105, and then within a couple of days, you guys stopped out at 104, let's say 50. You lost 50 cents on that transaction, and then you put it back again. Once it clears this one, because now this is the high, right? So once it clears this one right here, you put it out again, and boom, you would have made some money. So, and then let's say you get stopped out, you will put it on again, and boom. So like you want to keep at it, even if you were taking this, well, you were not taking that long one because this 104 was in play. So back here, 87, 88, boom. So trading is so simple. This is simple. You look at this base, you put a trend line, and if it breaks it, you take it. That's it. I mean, what's complicated about that? And then if it comes back inside, you get out. If it comes back inside, you get out. That's it. Simple. Very simple. It's not easy, but it's very simple. Let me see here. And I want to give you one that I gave you, SQM. I gave it to you guys here at 67.50, right? 67.55 was my entry on Thursday. 67.55, I gave you that entry. You would have taken it right here, let's say at 68. You would have had 10-point move. Right now. Let's say you would have gotten stopped out somewhere at 75. Okay, you made 7 points in 2 days. That's like almost 8%, 9% in 2 days. So this works. This works. Take them. And if you would have gotten stopped out, let's say you bought it at 68, you got stopped out at 67, $1. You lost $1. That's, let's say again 100 shares, you lose $100. But here you would have taken it, you would have made 700. That is great risk reward. Great risk reward. Okay, the ones that I have on right now, I want to go over. Again, I'm not going through these for anything other than showing you to build confidence that this works. This approach to the market works. Over here, you would have taken, let's say at 58, you would have taken it all the way. Let's say you got stopped out right here. Okay, you got 65 around there. So you made 7 points in less than a week. Here, perfect example. Let's say you were taking it at 55.35, right? And then you got stopped out right here. Let's say 54.70. You lost 75 cents. You would have taken 100 shares, you would have lost $75. You could live with losing $75 with potential to make 700. I mean, that's how we trade. That's how I trade. And I want to encourage you to go ahead and go through the list that I give you every week. These are the best stocks that are working. Go through the stock setups that I give you on a daily basis. And even if I don't take them, and if you see the breakout, if you get an alert and it's breaking out, and it's breaking out on volume, you see volume. Look at this. Look at this volume increase above average. Look at this volume increase on this breakout. That is a solid thrust through the pivot. This is a no-brainer trade. I mean, no-brainer. Look at this volume bar. Okay? That's what you're looking for. Look over here. Look at this breakout right here. Look at this volume bar. And look at this next couple of days, the volume. And then when the volume dries up, it's stalling. And then that's it. You get out when it breaks the little shelf. That's trading. I just want to encourage you to take on trades. Take them. And then let me know about them so I can kind of like encourage you on and give you some guidance from what I'm seeing. Make your own decisions, but I'm here to give you guidance. Not tell you what to do, but just give you guidance. Okay, what I have on right now, and then why. Okay, AOSL, great company. I like the numbers. Okay, increasing sales. increasing earnings. I like the numbers. Yes, it's a very low group, so I encourage on trading, top 40 groups with growing earnings and sales over 20-25%. Yes, but what did I do? Did I buy it? Did I buy it long? No, I did not. So that's why I only buy long. I actually buy the shares. I'm buying 100 shares if it's a top 40 industry group with growing earnings and sales. Okay, so what did I do here? I sold a 40 put. So if you notice, the ones that I'm selling puts are because they're not trending. They're not, this is a buy right here. You buy it at 35 and you take it to like in the 40s. You buy it at 43 and you take it to the 50. That kind of thing. This is not doing this. This is not, this is kind of choppy. This is very, very, very volatile. So what do I do for when it's volatile? The VIX is high, I sell premium. So I'm pretty comfortable with a 40 price range. It hit 42 right here. 38 is kind of like, relatively 40. And then this is, a huge down day right here. I don't know why. I don't care. Semiconductors and the NASDAQ was getting hit. So NASDAQ growth stocks are getting hit. NVIDIA got hit today and so forth. Everything got hit. Microsoft, Apple, everything, Google. So this is one of those growth stocks. So I got, it's down 10%. Just because the market is down, so the premium is super high. So as long as AOSL stays above 40, one, I have two trades on. One, before Friday, and two, by April. Well, again, I don't care about the April. I'm not holding it for that long. I'm just waiting for just a little bit, just a little bit of pop here. One day. I just need 1 day for the market to be up in the next 2 weeks. 1 day. And we have even intraday. Even if the market goes down at the beginning of the day, and then somehow it kind of rallies up in the afternoon, and then it tanks again. I don't care. And this little rally right here, this sucker's gonna make you money because that premium is going to go down in price. So I could buy it back at a 25%, 35% gain. That's how I sell premium. I take advantage of it, like little intraday moves that the market doesn't go down like this. It goes down, it has, and then it tanks, and then it goes tanks again. Well, these little up rallies, the premium on this right here shrinks. And then if I sell it at 250 and I can buy it back at 180 or 175, I'm making 35% in a day, in 2 days. And then you just keep, rinse and repeat, rinse and repeat, rinse and repeat. Okay, that's the trades on these guys. ASO, BRKB, Berkshire Hathaway, the B shares, same thing. It was down, it was down a lot more. Look at it. It closed at the end, at the upper range of the day. So it was down a lot more. So when it hit this right here, and I didn't see it break the moving average, I sold puts here. So I think I sold it I think I had the 300, I think, something like that. I know I have a low enough one that I have enough leverage. So again, as long as this stays in the next couple of weeks, or even the next week above this, or even if we have one little rally day, I'm taking profits on this one. The other one that I sold puts on, NVIDIA. I love NVIDIA. I mean, look at these numbers, man. I mean, it's just insane growth. So again, I'm not falling in love with the company. I'm not buying it at 300 thinking, no, it has to go up. It has to go up because look at these numbers. It doesn't have to do anything. I'm just trading what I see. It's a great company. Great entry right here, obviously. You take it at 240, you take it all the way to 300. So it's obviously going down. It broke the 50 right here. Well, I mean, the 50 started trending down right here. And from this point right here, if you notice, I mean, look at that. It has never gotten up above that little shell. That's why I have a trend line there. And I have this trend line right here. And once it broke the 50 right there, it's never been this high again. So the 50 works, guys. So what did I do? I sold the 200. I sold the 200 for on the butterfly. So as long as it doesn't hit 200, I'm perfectly fine. You can actually go. That's the beauty about butterflies. If it goes down a little further, I think I have the 210. My 210 is going to go up. My put is going to go up, but the 200 should not go up as much because it's still further away. So I can make money on one and make money on the other one at the same time. It's very time sensitive. So I'm gonna let it work a little bit more before I close it. And then the other one I sold, I had the 175. down here for April. That's more of a long-term play where I'm gonna just keep rolling and keep collecting cash as much as I can. If I have 50% gain on it, I'm closing it I'm taking my money and running. And then once we have another big down day like this again, that I see it. Okay. I'm not selling premium when we have a big down day just because we have a big down day. I want to see a big down day with a confirmation on the market timing that is also below at least 30.25. We got as low as 30 today. We hit 28 for like a little second, and then that's why I started taking all these trades on. Just because it was Friday, and then I have Saturday and Sunday for extra time, the value decay on my premium. So I'm making money right now on those short puts just because the time is passing. So if Monday we have, even if we go further down on Monday, and then we have a little bit during the day, there's some money to be made there. So again, it's just a probabilities trade. That's all it is. NVIDIA. The same thing with Apple, the butterfly of Apple. I think I have the 150 somewhere around here. So I'm liking the 200 as support. It held it beautifully right there, and it hasn't even touched it. Even back here, even all these low days, the 200 has held. So I'm happy with that trade. Apple doesn't have to do anything. You could just meander around. I don't care as long as it doesn't hit 140. I'm perfectly fine. MU, same concept. I think I have the 70. I'm comfortable with the 70 on MU. I mean, it's way down here. The 200 has relatively, held a little bit. Even the lowest was 75 here, and the last few times it has held. So again, MU is a it's a growth stock. I mean, look at these growth numbers. Look at this. Right? I mean, it's just insane, the growth. So, but again, it's choppy around. So what happens when it's choppy around? I'm selling premium. Pool. I've had it for a couple of days now. Same thing. I have the 400. So great numbers, right? Great numbers. Insane growth. I mean, look at this earnings per share. That's just insane. But again, this is not a group that's working right now. So it's going down. But as long as it doesn't go down enough, I'm perfectly fine. You could do anything in this area right here. You could do anything you want in this area right here. You could do anything you want. As long as it doesn't go here, I'm perfectly fine. And then SXC, I still own it. This puppy's working. I took it right, look at this. I took it right there. That one I still have. I alerted it. I did take this one, and I'm writing it all the way up, and I have a 1.5% trailing stop. So it went up 4.85% on Friday. I mean, again, it's 45 cents, but if you have 500 shares, that's pretty good money. I started with 500, and then again, I think I've been scaling out. I think a 25% profit day one, a 25% profit day two, and then I think I took another 25% profit, and then I think I have a quarter position left, which is about 125 shares that I have left. So I'm just writing it. If a Monday comes back down 1.5%, I get out, and I realize I think it was like a 22% return in what 1, 2, 3 days, 4 days in a week. That's a pretty good trade. All right, so those are the ones that worked, and I hope you guys took. I know you didn't, but the next ones maybe you will. It gives you confidence, and then you're seeing it. It's like, oh yeah, look, it is working, and you take it on your own. And then the ones that I have on the Y. So these are the ones that I'm looking at for next week and the entries. ICL 1171. ICL 1171. I want to take this high right here. Great numbers. Top 40 industry group. Okay, nice growth here. It's stabilizing a little bit next year, but I'm not holding it for next year. I just want to get a little pop here and close it out. SM. I gave you guys SM at 38.51. 38.51. I gave you SM back here somewhere. So if you would have taken it, you would have been up right now to begin with. But right now, I want SM above 40. So 40.05. SM 40.05. We could take this little shelf right here. Hopefully, you'll do one of these jobs right here where it just eventually takes off. and from 27 to 32, that's a 5-point move on a $25 stock. That's pretty damn good. And then even here, 32 to 38, that would have been good. So 40.05. Look at these numbers. I mean, insane growth. Okay, SM. Next one. NOW, is that what it is? Nope, that's not it. I want to say NOV. That is not it. I can't understand my handwriting in this one, so I know it's a $4 stock. So I'll come back to this one. I have no idea what I wrote down. Okay, the next one, BSM. BSM is going to be at 1276. 1276. I want to take out this high right here. BSM 1276. Nice little shelf. Hopefully, eventually it takes out. Look at these numbers again. If you notice the theme, guys, I'm never going to give you a stock to buy that's going to have like negative numbers. That they're decreasing. I'm never going to give you a stock to buy that is decreasing in sales and is decreasing in earnings. I would never do that. If you notice, just go through all the videos. Every single one has got positive growth. The ones that I'm buying long, okay? The ones that I'm selling premium, I already explained. It's a different trade. It's a different concept, a different trade. Okay, I'm a one-trick pony. I'm literally like a two-trick pony. I focus on one thing. I focus on growth stocks that are increasing in sales and or earnings by 25% or more. The lowest is 20%. So I want to see a 20 to 25% growth increase between quarter over quarter. We have 37% increase here. We have 132% increase here. We have 500% increase here. We have 400%. I don't see them both, but I like to see either or at that. I want it to be in the top 40 industry group. So I want to be a leading industry in the market, leading stock in a leading industry with accelerating growth and sales or sales of 25% or more. I wanted to see from lower left to upper right the chart. I wanted to build a base. I want to get the previous high that I'm seeing, and I want to get that previous high to clear. Once that happens, I buy and I get out within 2% max, 3% max below that if it doesn't work. And if it does work, I take it for what it's worth. And then I have a tier scale in and scale out. So for example, here I buy, let's say I want to buy 500 shares of this. I might buy 200 here, and then above that, I might buy another 200 here or 250 here, and then that's it right here. And then I might getting out right here on this first one, and then right here on this second one. So my scaling out is 1/3 at 1.5% trading stop, 1/3 at 3.5% trading stop, and 1/3 at 5.5% trading stop. Simple. That's it. That's my whole trading, schmill. That's all I do. Simple as that. On these kind of stocks. On stocks that are, like very well known leaders in the market, Teslas, Nvidias, Googles, the names that we all know, Apples, that are not going to go out of business anytime soon. They're just going through a hard time right now just because the market is going through a hard time, so they're going to get sold off. As simple as that. They're not in the leading industry, but they're great, incredible companies. Again, Tesla. So what am I doing with these stocks? I sell premium. Okay, I have right now an order to sell the 550 of Tesla, but I want this to break down a little more. I want to get a little bit more premium on it. The same thing I did with Nvidia. Nvidia, I sold right here and I sold right here because it gave me the opportunity and gave me a good return on my premium on my margin requirement. So again, that's all I do. I do two things in the market. I don't chase every single shiny object that I see. I don't follow the news. I do not watch the news. I don't have the news on. I don't watch Fox. I don't watch CNBC. I don't care what anybody says. I don't care what's happening in the news. I don't care what the alert is. I'm going to see it in the price action. I'm going to see it. If anything affects the market, you will see it in the price of the stock. They're going to go up or they're going to go down. That's it. As simple as that. And if it breaks a moving average, I get out. And if it breaks a base, I get in. That's it. I don't let myself get persuaded by any talking head on the media, on the TV. I don't watch any of that. I really don't. I watch price action. I'm seeing something that I like, I take it. You know, I'm seeing this right here. So if it breaks out 1065, actually 1081, because this is the high here, 1081. So that's the next one I want to give you, BRY 1081. So I'm looking at price action. You know, if this, then that. If this breaks this, I buy it. If it comes back inside, I sell it. If this, then that. If this breaks, that I buy. If this breaks, that I sell. It's just that simple. Okay, don't get involved with anything else. Look at this little entry right here, 725. Okay, you would have gotten stopped out. You would have lost what, 50 bucks, and then you get back in here. You would have gotten stopped out. You lost another 50 bucks. Here, you take it. Boom, you make 700. You make 500, 300, whatever it is, but you just keep at it. You just, it's very simple. I just want to reiterate, don't get persuaded by anything other than price and volume. Price and volume, that's all that matters. BRY 1081, BRY. CDEV 906. 906. I want to break this high right here. It kind of hit it twice here, and it sold off again. And it has increasing volume here. So that's not necessarily a good thing when the volume is increasing on the downside. That means somebody's distribution is going on. Somebody's selling it off. But again, look at the numbers. Great numbers. Okay, it's going from negative to positive. Top industry group. So, but I want to see it. I want to see this break off. CDEV. SWN 605. SWN 605. I want to break this high right here. It's got some work to do. It's got some empty space here. Okay, it's kind of been going. If this might be a little cheat entry. I personally won't take it, but if you want to take it, you could take like a 556 entry here. 556, clearing this high right here. You might take it to 6. Maybe take some money off the table, and then if it breaks 6, take it off again. I'm personally not going to take it, but it wouldn't be a bad entry right here. It wouldn't be. It definitely would not be a bad entry. A little early cheat entry here. Look at these numbers. Look at these numbers. I mean, just insane growth. Top industry group. SWN. ESTE. ESTE 1420. 1420. I want to take out this little high right here. And then if it hits 1525 around there, I'm taking 25% off just to secure a profit. And if it breaks 1528, 29, I'm adding. Okay, so this is how you scale in. You buy 50% position here, you sell 25% position here, and if it comes back down again, you break out, you stop out at break even, you have a guaranteed winner. And if it continues higher, you buy your other 50% here, and you write it with a stop right beneath it. So this guarantees you to be a winner. Okay? That's how you would trade this one. ESTE. LPI. LPI 8855. 8855. I want to take off this right here, this downward trend line here. Eventually it's going to hit somewhere around here. I want to take off this high right here. Why? Because I'm playing for the 100. See how you never got to the 100 here, and then boom, you probably would have taken this little. I would have taken this little entry right here, and then you would, then whatever. So now it's this little base right here is 78.22. That broke, so that's a good sign. This lower base broke. So I want to see this break, and then take it to 100. Sell some more here, 25%, 30%, 40% profit. Take it. I mean, position, and then take the profit. And then if it breaks 100, add on to it. When it comes back, get out, and guarantee yourself a winner. LPI 8855. LPI. CVE 1621. 1621. I want to break out. I want this little shelf right here. This high right here. I want to take it off. 1621. Look at those numbers. 287 growth in sales. 247 the previous quarter. I mean, just insane. Look at this sales earnings acceleration. Top industry group. Top 40. I'm looking for top 50 sometimes, but like anything top 40, it's a leading industry group. That was CVE, CMRE, CMRE 1512, 1512. I want to take out this little shelf right here, this little high, 1512. If it breaks out 1512 at like around 1650, I'm taking 25% off profit. If it breaks off between 1670, 1650, 1675, I'm adding. Okay, that's how I'm trading this one. This will guarantee myself a profit because it comes back down again. My final stop is at break even, and I guarantee myself a winner. Earnings growth, earnings growth, sales growth, after-tax margin growth. Look at this, insane. Top 20 industry group. CMRE. GOGE. This is what the 1226. GOGL 1226. I want to take this high right here. This one it was basically a scratch for me. I think I made like $50 on like 100 shares, and I lost like $80 on the other 100, and then I ended up just breaking even on the other 100. So like it was basically a net like I lost $30, something like that. It didn't work. But again, I lost $30. I mean, I could live with taking shots and losing $30. I mean, this would have been a good one here at 10. You take it at 10 all the way to almost 12. It hit 12. So I got stopped out on my final shares right here. I wasn't around for Friday, which is a good thing. But again, it's holding at 21, so that's a positive sign, and it's going down in price in decreasing volume. And again, look at the sales growth and the earnings growth. I like it. Okay, it's still a good, technically sound company. I'm just not gonna, I just didn't feel like writing it for, more than a 2% loss, 1% loss, something like that. So again, GOGL 1226. We'll try it again. GOGL. OCP. OCP 3427. 3427. OCP. Why isn't OCP working? OCP. It is not OCP. Did I write the number the wrong thing down? Oh man. Okay. Sorry about that. I don't know why I wrote the wrong thing down. So let's go to another one. VLO. VLO. VLO 8765. 8765. VLO. So I wanted to break this little shelf right here. See, it came to this high right here. It came back down again. It tried to test it. It broke it. Then it eventually took off, and it came back down again. It tested it, and then it tested it here. So this little area here, it's a relevant price range. Okay. So I wanted to break out of 87.65. Again, I'm doing a 100 play. Never really reached 100. It came back down again. So 87.65, I get in. If it hits like somewhere like 93, 94, actually not even 94. If it hits 93, I'm taking 25% off, and I'm raising my stop to 89. So I have a guaranteed winner. Okay. If it breaks, I have another trend line alert here. If it breaks 93, 94, I'm adding for the 100 play. Okay. That's how I'm trading this one. Perfect example here. This was a good base right here, 83.15. So we were back here somewhere. I would have taken it at 83.25. I would have taken it right here, and then somewhere around here I would have probably gotten stopped out, and it might have been a scratch. I might have made 25%. I would have taken 25% off somewhere around here. But let's say I didn't. Okay, let's say I didn't, and I took it at 83.25, and I got out at 80. Let's say 82. So 82 or 80 something. So I would have lost $50. Okay, that's trading. So that's what I'm saying. They don't all work, but when they don't work, your loss is so minimal that it just like doesn't bother you. I mean, you're not losing $1,000, to make 700. You're losing 100 to make 700. Okay, that's how you trade. Even this longer base right here. Let's say I would have taken it at 85. Okay, I took it at 85 and I got out at 84.50. I lost $50. That's what I'm doing here. I'm taking it at 87.65, and I'm getting out somewhere around, maybe let's say, 86, 30, 86, 65. Let's say I'm going to risk $1. So I'm going to risk $100 to potentially make, 600 from 87 to like 93. Okay? That's the trade. And that's how you trade. The last one, Zim. Zim shook me out. Zim shook me out. I took this entry here, if you remember. I took that entry right there. I took it, and I got stopped out. I think I lost like 1.5%, which is like maybe like $80. I took it, and then it came back inside. I didn't take it because I was in something else, and then it actually worked, and it came back inside on Friday. It lost 3% on Friday. So, but it's still working. So I want to break this little shelf right here. So it's a nice little cup, and hopefully a little handle builds here, and then eventually takes off. So Zim, 75.26, 75.26. Okay. Again, Zim shakes you out because here, this one right here, I took this one at 59, and then it stopped me out. I think I took a little bit of profit here, but eventually it was like a scratch. They didn't do anything, and then actually this one would have worked. That would have been nice. They didn't take that one. I took this one, stopped me out, little loss. So it's kind of in choppy territory here because the market is choppy. So it's choppy territory. So I want clear sky. And the reason why you buy when it's at the high, guys, because it's clear skies. There's nobody here resisting you. There's nobody here that's gonna lose. Everybody that buys at 59 is a winner. Everybody, every single person that buys at 59 here is a winner. So you don't have any downward pressure. Something like Square, okay? Let's say you see this, oh, Square is awesome, it's going up, I'm gonna buy it here. Why? You have everybody here that bought here. Everybody here wants to get out. So you have pressure. That's why stocks do this, because you have this here that wants to get out. So when you have a little bit of a rally, everybody that's here wants to get out, sells off, and it keeps going lower. That's what happened here. Look at this. It went down to the 50. I mean, look at this. This is like technical analysis 101. It hit the 50 2 days in a row. Boom, sold off. Down 7% on Friday. It went from like 130 here to like back to 100. Why? Because you have all these people that are here along the way wanting to get out. They all want to get out. The second it goes a little bit higher. So you have resistance. That's why you never buy below the 50. You want clear skies. 278, you went to 289, and then from 289, it's got nothing but downhill. Here, once it broke that, this is the 50 period moving average on the weekly, which is the 10-week. Once it broke that, let's say you would have gotten stopped out at 220, you would have avoided all this mess. Okay, yeah, here, amazing. You bought it at 80 and you took it to 300. That's great. You probably would have gotten stopped out here somewhere, let's say at 160. Still, you made 100% return. So you trade these things. You don't hold these things. Okay, you buy this, you get out once. This is the perfect example of how the market works. It goes up for a while, then it consolidates, it goes down, then up. It goes up, it consolidates, it goes down. Now it's going to consolidate, it's going to go up, it's going to consolidate, go down a little bit, consolidate, and then eventually breaks this, if at all ever. It doesn't mean it's going to ever come back here again. I mean, look at Microsoft, right? Microsoft. Let me look at the monthly. Microsoft was sideways from 2000 to 2013. That's 13 years. 13 years before Microsoft broke out. Do you want to hold the stock for 13 years? No, you don't. So you buy here. When it breaks the 50, you get out. You avoid the drama. When it comes back on top, when it breaks the previous high you got out, then you get in again. Just that simple. Look at this run. Has had from 2014 to 2022. Look at this run, right? But you avoid this. You don't want this, okay? Same kind of concept. PayPal. Consolidated at IPO, great run, right? Consolidated, great run. Consolidated, went down a little bit, great run. Now it's not even here. You could say there's a little consolidation, and then it just broke down. That's it. It's done. It's done. It's over. Like this is not going to go to 300, next week. It's just not gonna happen. So great run, right? Consolidate, up, consolidation, up, consolidation, little down because of COVID. Boom, up, consolidation, up, consolidation, up, broke it. You're hoping for consolidation. You're hoping for this. It never happens. You get this. You get out. Simple. Simple, right? I mean, simple. You're looking at it right here. Just that simple. Okay. I'm saying the same thing in 20 different ways, so I hope it hits home for you guys. Don't be discouraged if you've lost some money in the past making mistakes. I have lost a lot of money with these same mistakes, but I learned from the mistakes, and I've made a lot of money on these guys, on these little trends right here. You just learn, and I'm going to continue to make money because the market is going to do the same thing for the rest of our lives. As long as we have capitalism, we are going to continue to grow because there's going to be new innovations, new companies are going to come out, new IPOs. They're going to go up. They're going to form a base. They're going to go up. They're going to form a base. It's just the way it is. It's been happening for 200 years since the market was open. Because why? Because people are trading the market, and people have not changed. We have the same emotions. We have greed. We have fear. We have happiness. We have sadness. We have the same thing. So as long as humans are trading the market, you're going to get the same cycles. You're going to go up, you can consolidate. You're going to go up, you can consolidate, and then eventually you're not going to go up anymore. You're going to start going down. It's like, oh, okay, this is not doing the same thing. You get out, and you avoid all this drama, and then you wait for a consolidation above this high. You don't want to do this, and then buy this breakout because you're going to have this resistance here. You want to do this, and then buy this breakout. Okay. All right, guys. Have a blessed rest of your weekend. I think I've said the same thing in 40 different ways, and I just want to, again, I hope it hits home. I really want you to succeed, and I have noticed, and I have read, I have studied this, that these kind of setups, they work. They have worked throughout history, and they will continue to work. And it's simple, it's stress-free. You have no drama. You feel good, and you feel confident that you can make money in the stock market because you have a good, tradable, consistent, productive system with guardrails to secure your money, and your risk is very minimal to potential high reward. If you just let the emotions get out of the way and you don't trade on emotions, you trade on what you see and the patterns and the systems that I'm trying to instill in you guys. All right. Have a great, blessed weekend. I am gonna have fun tonight at the Sixers game, and I will talk to you guys on Monday.